you very much for the introduction and for everybody listening this evening and for taking the time. It's really appreciated. I have the slide deck, as Chris says, to walk through, but I'll try and keep it short and efficient so that we have good time for questions. I'm Katherine Rowe, the CEO of Wentworth Resources, and delighted to be able to give you a little bit of background of our business this evening, and a little bit about where we've come from, where we are, and interestingly, where we'd like to go next. So just moving through, we've touched on the disclaimer generally, as Chris did a moment ago, so I don't think we need to dwell on that. Very simple agenda. It's a simple, straightforward, easy to understand business. So that's the good news. As I say, trying to give a very high level summary of the business this evening. Strong fundamentals, that's really important. The robust financial position of our business and what we're doing and how we've got there. The financial operating highlights, having released our full year 2021 results recently. What we're actually doing and the core strategy of our business, how we're empowering people with our energy, and then there's a piece on outlook for the future going forward. Just to start, who are we? As I say, I'm Katherine. I've been the CEO of Wentworth for over 2 years now, but I've been involved in the business in a number of different roles for about 8 years. We're a very small, lean team. We are AIM listed. As Chris said, our ticker is WEN. WEN, and we like to pride ourselves on a very low staff and efficient structure where we all work very closely together. This is our PLC board, made up of myself as an executive and 3 independent directors that you see here, all with very different and contributing skill sets. So who are we? Who are we? What are we? We're very simply a natural gas producer focused entirely on Tanzania. We have a single asset, which is called Mnazi Bay, and you can see that here on this map of Africa. Mnazi Bay is in the south of Tanzania, and it's one of only 2 producing gas fields in Tanzania today. Tanzania has the largest natural gas infrastructure in the whole of East Africa. So it's a really critical part of the energy mix in country. We supply our gas for power generation predominantly, for domestic use. And as it says here, it's a natural, it's a critical player in that energy landscape. And gas is really being seen more and more as that transitional fuel to enable countries like Tanzania to develop through low-cost, reliable power, which wasn't available until we started producing our gas in meaningful quantities. So we're one of 2 gas producers. I think that's quite unique. We also have the government as a partner in our license, which is also very unique. And I think that goes a long way to showing how we do business in Tanzania and why we're successful and why we've got a very robust business model as a result of that. So about 30%, just as a very brief overview, about 30% of our gas contribute to the overall power generation. So you can see it's a meaningful asset for the country. And it's enabled us to build our position financially. It's a very low cost of operation, which means that we have a very profitable business. And we were able to start a dividend policy in 2019 on the back of those fundamentals. And our dividend policy has been progressive. We've increased the dividend ever since we've started that policy in 2019. And we're now yielding around 7–8%, which for a smallish business like ourselves, we think is a differentiator. So just moving through, we like to look at ourselves with 3 fundamental pillars, which is really what this slide is designed to articulate. Really, this business is all about the development and the demand in power and demand for energy in Tanzania. So we are seeing that demand coming through, and we are working alongside the government to deliver universal access to the people in Tanzania. What does that really mean? That means that by 2030, we would like every citizen in Tanzania to have access to electricity And that sounds very basic. It's something that we probably all take for granted. But at the moment, we're looking at sub 40% of access rates in Tanzania, and we're really trying to improve that, just to bring people out of energy poverty and improve their livelihoods, as well as looking to develop the country. As I mentioned, we're a key partner in Tanzania's goal to deliver that power. We're currently supplying around half of that gas for power generation from our asset. And to give you an idea about the energy mix, we think over 50% of power generation in Tanzania comes from natural gas, and we're producing half of that. Very strong economic outlook in the country, strong GDP growth. You look at that, 5.8% predicted for this year relative to the rest of the world is pretty impressive. It also has a very high population growth, high population and a growing young population on top of that. So there's lots of demand coming through, and we're really here to try to supply into that growing demand. We've had record results. So 2021 was good production. We averaged 81.6 million cubic feet per day, as you can see here. We've got 5 existing wells in the field that are performing above expectations. We have a low cost of operation, as I mentioned, which allows us to generate a very healthy margin. And we have 2P of reserves estimated at 135 BCF, which gives us that NPV value you see here of $108 million when you look at our market cap of around $50 million. So we believe that we're trading way below that core value. All of that allows us to be able to record very healthy revenues. Our strongest revenues to date for our full year 2021 of nearly $24 million. And as you can see, that's a healthy increase from the prior year, and we're looking to grow and move that in the right direction. We're debt free. We have just under $23 million on the balance sheet, and that allows us the financial flexibility to grow our business, but also to pay that dividend that I mentioned. And that's really down to the great counterparty we have in the government. We sell to the government. They pay regularly, on time, in dollars, and they remain current with those payments. And again, that's a very strong track record from a payment perspective. And we have a fixed gas price. So even in this high gas price environment in which we find ourselves today, we haven't suffered any of that commodity price volatility because of the fixed gas price. And that really helps our visibility, enabled our confidence to continue to deliver the dividend, but also to look at funding the growth of this business. So as we say here, we are a Tanzanian business, and we're committed to building a business in Tanzania. We've done well, we've made a success of it. What can we do to do more and leverage that skill? Just as a very brief overview on this slide, I think we've covered a lot of it. We're very proud of our health and safety record. Since material production started in 2015, we've had no lost time incidents, and that's really critical for a business in our sector. So we're very proud of that. And again, we believe goes down to the strength of the joint venture, the strength of our partnerships, and to make sure that at every given point in time we're doing the right thing. Talked about the dividend there. That's the highest dividend we've returned in our corporate history of $4 million last year, so we're proud of that. And we have a progressive policy that we stated quite explicitly, so we're looking to increase that this year. We beat guidance for last year, having already guided upwards during the midpoint of last year. So we feel comfortable with the guidance we've set this year at 75 to 85 million cubic feet per day. And part of that confidence is underpinned by the strongest quarter that we've ever had, which was in Q1 this year, which we announced a few weeks ago, having the strongest quarter. So we can see that demand growth coming through in a very tangible way. And we operate in a very sustainable way. We take sustainability very seriously. And again, in line with our annual results, we published our sustainability report for 2021, which details all of the efforts and the way that we behave as a business, which we're very proud of. This just shows a bit of direction of travel. As I said, since materials started really kind of in the second half of 2015, you can see how we've been building up production volumes over those years. And as I say, we expect 2022 to be higher if we can deliver our guidance. Part of that reason that we say here in the second bullet is the growth in industrial demand. So not only are we seeing growth in power generation, we're also seeing growth in industrial demand, and that's as the country transforms itself from that traditional agricultural type economy to something more industrialized as it goes through its industrial revolution, and that's where we think we'll see a bit of a step change in energy demand, and we need to be ready to supply into that demand and continue to make sure that we're a critical partner in seeing the development of the country. We're also seeing those political shifts I mentioned here in the middle bubble here is really interesting, because that is a change that we've seen noticeably in the last year, that change in approach to international investment, welcoming international investment back into the country, and working with partners such as ourselves who have really strong, credible 10-year plus track records of doing business in Tanzania and really supporting that socio-economic development. So we're well positioned for the next stage, both for Wentworth and for Tanzania. Financial strength, you know, the proof is in the pudding. Proof is in our strong numbers, great revenues, profitability. We're always looking to drive costs as much as possible to increase efficiency, to maintain the healthier bottom line as well as top line. We are fortunate. This is a low-cost operating environment, so we remain low at 55 cents per MCF, and we're looking at that $3.44 for our price. So you can see there's healthy margin there. Not only do we have our dividend, we also initiated a buyback program at the end of last year, which has continued through this year. We have seen the share price pleasantly increase over the last few weeks, particularly with the strength of results that we reported. And just that bottom bit there, you know, this is the exciting bit for us. We see tangible positive indicators of that increased demand coming through, and there's really only us and the other producing asset available to take advantage of that in the short term. So that's the really critical piece from an investment perspective. Again, no need to dwell on this slide. As Chris said earlier, these are available. They're also on our website, but I think it just shows the direction of travel and how far we've come with our business. And how the investment proposition is really underpinned. Hopefully all these charts are going in the right direction, the way that you'd like to see them. Profitability up, cash up, debt down, revenue up, OPEX down and stabilizing, and production increasing. We'd like to see that over time. So really strong direction of travel, and something we're proud of, and also helps to explain how we go about looking at growth opportunities. Dividend, we're one of very few in the sector, as we say here, you know, one of only 9 in the whole of the London listed sector, both AIM and Main, committed to paying a dividend in our sector. And it's not a new thing. We've been doing this for several years now. So I think that really speaks for itself in terms of how fiscally responsible we are, and how capital return to our shareholders is really important, and it's a very healthy yield. So empowering people with energy, I just wanted to touch a little bit on this section because for those of you not familiar with Tanzania, I think it's quite important just to set the scene as to the operating environment for us and where the future outlook is. So as I mentioned, we think 57% of the energy mix in Tanzania is currently through natural gas, and as I say, we're about half of that. So, you know, big important player currently, but lots of opportunity to do more. We really like the hydropower that sits alongside natural gas. Tanzania is very fortunate that it's being able to try to develop its economy in a lower carbon way as possible, and not every country in Africa has that advantage. So we're reducing the reliance on those heavy fuel oils, on burning liquid fuel for emergency. We're reducing that more and more, and we have some very compelling statistics to sort of highlight exactly how our gas has helped with that. this map here, we really like this because this really shows the tangible evidence of what the country is trying to do. And it's all very well me saying to you that the country is committed to developing its economy, and it's therefore going to need stable, reliable gas to power that development. But actually what you need to see is tangible evidence of that. So some of these things we highlight here are real industrial projects that are under construction that need energy. So the standard gauge railway, which is electrified railway across the country, which has never been in place before for transporting goods. That's a really important part of the story. Obviously, we have our pipeline, this red line here from Atwara, which is where our gas field is, up to Dar es Salaam. That's the big natural gas infrastructure pipeline into which we produce our gas, and that's that's a huge advantage for the country, unlike some of its neighbouring countries. Hence why there's been some discussions that you may have read about a pipeline to Mombasa, which is this potential pipeline, the dotted line here, because Tanzania really has aspirations to be the East Africa energy hub, and try to be the supplier for the region. And I think we've got all the right ingredients. So this really helps to show just how committed Tanzania is to developing their economy, and how things are really starting to happen. And that provides a real opportunity for us. And that's why we're so excited about what next. Again, maybe I'll leave this for you to review, but there are some really compelling statistics here about what our natural gas has done, how it has saved $15 billion in public finances, particularly directly from Mnazi Bay, since production, small production, but since we started in 2007. For me, enabling energy access is really critical. It's a really important part of our corporate philosophy. Not only are we a big supplier of demand, but we're touching villages, rural villages, with electricity that just didn't have that access previously. We think around 84% of rural villages have now been connected, and there's an aspiration to reach 100% by the end of this year if we can ensure that the distribution and transmission also can improve access of the power. Sustainability really at the heart of what we do. There's lots of information in our sustainability report, which we're very proud of. Would welcome you to visit our website and visit that report. It's there alongside our annual report, which will be published tomorrow. You can see what we're trying to do in terms of support that transition, that just transition. The global energy transition is a topic for all of us. But we do have to look at it carefully when we consider the developing world and their needs. And we are aligning ourselves to these UN sustainable goals, and really trying to unpick where we can add value the most. And we've done a lot of work on this. And for a small business like ourselves, we don't take the view that we should fly under the radar. We take the view that we should stand up and be counted on our efforts as much as everyone else. And I believe that leads to better business, good quality shareholders, and hopefully more and more shareholders that have previously not looked at investing in us will come due to the way we do business and just how that's coming through in tangible, quality, good results. So I won't touch on this too much, but there's lots in our report for those who are interested, particularly on the environmental side, which is this slide summarizes some of our emission data. We have one of the lowest, if not the lowest, carbon intensity in our sector in the London listed market. So it's something we're really proud of. We're very fortunate that we have a low emissions operation, but we can also always continue to do more, and that continues to be a priority for us despite the growth aspirations that we're looking at. So what are the growth aspirations and what is the outlook? So I've been through a lot of this. There's short, medium and long term is how I like to look at it for Wentworth. we've got very immediate short-term upside in our supply capability, and we put things, some of the key drivers that are here on the right-hand side speak to those. So where are we seeing new demand coming from today and tomorrow in the very short term? We're seeing it from increased industrial customers. We're seeing it from the increased demand from the power stations, which are Kinyerezi 1 and Kinyerezi 2. Ubungo 3 is also a power station. That standard gauge railway line, which I mentioned. And for example, we have a gold mine, Gator Gold Mine, for the first time taking power from TANESCO, the state power company. So we're seeing short-term demand coming through. Long-term, medium demand will come through as we see more and more of that industrialization. And longer term, we need to be able to increase our volumes significantly to match that demand that we talk about. So that will mean additional investment back into our asset. We are looking at expanding our portfolio for additional assets at the right time to support the growth in supply, so that we're there and ready to be able to meet that demand. And we've got a robust position and a robust balance sheet from which to do that. We've got great in-country relationships. We've got a strong track record, and there's very few of us. So it's very much the opportunity for us. We've been very fortunate to have stable and supportive shareholders, but we always would welcome new shareholders into our story at this time. And with the dividend and the underpinned robust financials, we think it's a strong equity story. That's our view, and we hope that we can try to extend some of that excitement to potential shareholders and current non-holders, and hopefully appeal to a broader investor base. So, Chris, I think that sort of tries to summarise where we are. Sorry if I've overrun a little bit.
Okay, I've got a few questions for you. Why do the BOD own so few shares and have invested so little of their own funds if the story is so compelling as you've outlined in the presentation?
Yeah, it's a great question, and that's something that does come up. We have transitioned this business over the years and restructured it. So traditionally we had owner management in our previous chairman, particularly Bob McBean. He continues to hold 5% of the business, so he's clearly one of our major shareholders. He's still very involved in the business, and we work together with him really well. So there's a history with Wentworth of owner management, and we are trying to build that up now with myself and the current team, but it takes a bit of time. We obviously do have a very transparent and good governed LTIP scheme to incentivise our key members of staff, but we will see that increase over time. It's part of the way that we've developed the business over time, the legacy. So I can understand that on the face of it today it doesn't look like much, but we are certainly invested to improve that position.
Okay, moving on. Do you see Wentworth organising gas supplies into the European market?
I don't think so, to be honest. No, I think it's a domestic Tanzania opportunity, so not likely.
Okay. What can you tell us about the political stability in Tanzania? Is there, or could there be, any interference by the Tanzanian government in running of the country?
That is a great question. Very stable regime, and improving. It's certainly improving from a business-friendly perspective. We have a contract. We have a license agreement. We've never had any indications that they will not adhere to the terms of those. So that doesn't worry us. There are always changes at minister and parliamentary that could change, but we've never had any experience of that. And to be honest, the way it's going in Tanzania is trying to be much more business friendly. So if there are any changes, we believe they'll be for the better for us. And we've made a business work really well We've got the key relationships. This is an export product. This is really basic gas for hospitals, schools. It's a very symbiotic relationship. So it's unlikely that terms would change to the point that we would not be able to cope with them. And as I say, anything, we think it would be more favourable.
Okay.
It's very stable, very stable, based on British law. Very smart, well governed, clear structures. It's not difficult to navigate your way around that jurisdiction.
Okay. Specifically, if you're not the operator, what have Wentworth contributed to the health and safety record, and what have you had to do with the ESG strategy?
Well, yeah, that's a very nice question. Thank you, whoever asked that. It's kind of got two parts to it, but there's an overview actually, which that question addresses, which is we are non-operator, but we have a very high degree of influence in the partnership. I think that's a really important point. Often you see non-operated companies in our sector having one country manager or very sort of minimal country presence, and it's run out of London, and that's the way it is. That's not the case with Wentworth. All our human resources is pretty much in Tanzania. There's me and a couple of others, but we have a full strong team in Tanzania, and that's part of the reason why we've been successful as well, because we work alongside our operator very carefully. So what does that really mean? To answer that question, we contribute. We say this is what we need to do. We have a view about health and safety. We have a view about technical operations. We have a view about the budget, the work program. We don't just sit as a silent partner and accept what our operator says. We challenge and we add value. And so we've been very heavily involved in security measures. We've been heavily involved in health and safety mechanisms to put in place. And we work really well with our operators. So we do behind the scenes, we do add a lot. On the ESG strategy, we've pursued that independently at Wentworth because we needed to take control of our own strategy. So that is something that we have been working on for our own benefit, mainly because of our institutional shareholders as well expect us to take this seriously. So that's really something that we've done on our own with the help of Moore and Prom from a data mining perspective. But yes, it's important to our business model. And what we do next as well, Chris, how we add assets to the portfolio and how that fits into that overall strategy. So it's important we did our own grassroots approach on that.
Okay, I'll just squeeze in one more for you. I can't get any more in after that, I'm afraid. If you're looking to the M&A growth markets, can you rule out dilution?
Very conscious of dilution, particularly when we talk about the core NAV disconnect. We talk about the NPV versus the current market cap. So that's one of the reasons why we've tried to build up that robust balance sheet, so we've got firepower without having to dilute unnecessarily. So very, very sensitive to dilution impact. We hate the idea of equity at these levels if there isn't a good enough reason, because of that disconnect in value, and we're very, very committed to the dividend. So those priorities bear heavily when we consider M&A and how to fund it.
Okay, I want to get in one more actually, if I may. Why isn't Wentworth taking advantage of supplying LPG into the European markets during what could be a lucrative shortfall, as well as developing its East African model? If you could answer that quickly.
Very entrepreneurial question. The short answer is we have a contract with the government to supply our gas, and that is through our aggregator, our government partner. So that's really the priority in the business model for us. So it's an entrepreneurial outlook, but not something to take advantage of, I'm afraid.
Okay, Katherine, that's brilliant. Thank you very much for the time this evening. Great to see you. Thanks for your presentation.
Yeah, thank you, and thanks everyone for listening and for the questions. I really appreciate it.
Okay, and we'll send the slide decks on to everyone who's registered in this evening, and look forward to them coming back to you soon. Thanks very much.
Great. Okay, thanks everyone.